is almost November, which is absolutely wild. We are, that was the fourth interest rate drop in a row. It seems like yesterday we were talking about rates skyrocketing, and every podcast we did was, rates are up another 0.5%. Next meeting is up 1%. And here we are on the way down. We are our fourth rate drop into the 2024 cycle. And this was a big one.
We're back to where we were 2 years ago. I think the rate was at this level in November 2022. Feels good. You know, it feels, and I say it feels good, I mean, because I'm a variable rate mortgage holder, and also because I'm highly correlated to more people being able to afford to buy and sell homes. But I don't anticipate this rate announcement to show its immediate colors in the next few weeks. It's probably a lagging effect. It might help the November market, but I think it's most likely going to give more confidence and lead to a much busier 2025.
I anticipate this rate drop to actually end this podcast because we just won't have enough time to podcast anymore because it is going to be so smoking busy for the next 2 years. Yeah. No, it's not. The market is very bizarre right now. We get asked this question every single day, and I don't know what your common answer is, but I use words like weird and bizarre and strange and unpredictable. And I don't know if this 0.5 rate drop is going to change much for the next couple months, but if I was to guess, looking forward into the next couple months and the end of 2024, my guess is we see a slightly more active November than September and October. I think just from my...
Well, let's make it a prediction, Denny.
This is my prediction.
Okay, let's make it. Is November sales going to be higher this year than last?
Yes.
Yeah. It was pretty close, so I'll wait for October data first. What about October? October sales higher than this year than last?
Higher than last? No.
It's going to be around the same.
It's
around the same, probably. We'll see. Yeah. We'll find out next week.
Yeah. Even just from my personal database of clients in the last 24 hours, I've had more people reach out to me. It seems like rate announcement days usually, I'm prepping an email, sending them to people that are actively looking to buy and just kind of giving updates as we go. And yesterday there's more people reaching out to me, which I think is a sign that people understand that we're obviously on the way down, potentially at or in the vicinity of the bottom of market pricing in a lot of products in Greater Vancouver as rates continue to go down. And there's hints from Bank of Canada that we'll see more rate cuts coming in December and January and moving into next year. And it just seems like the sentiment, the optimism has shifted a little bit with this bigger rate cut. So my guess is November is more active than normal. We see more sales than last year. I don't think prices are going anywhere. On the other side of the spectrum, had a couple sellers reach out yesterday, had a listing appointment yesterday, and their sentiment was, well, the rates are going down. My price is going up. My price is worth more than it was a couple months ago when I talked to you last. And I don't think that's true. There's a lot of inventory. This specific property was a 2-bedroom condo in Brentwood. And in and around that price range, there's currently 43 2-bedroom condos that are like super specific, very, very similar square footage and price point available right now that are not selling. So it's going to take a little while for a lot of that inventory to sell through. But I do see more active months ahead.
Oh, yeah. I'd say in our little micro market or our business, you know, it doesn't reflect what Greater Vancouver's doing, but it seems like things have picked up in the last few weeks. It seems like there's more optimism about the future. There's not the same sort of negativity about the market. I think there's some people that are always negative, but it feels like the bottom is behind us. And it feels like buyers are kind of thinking that as well. There's very few people that I've run into lately that feel like it's going to get worse next year than better. Yeah. You know, so if you're a buyer and you're frustrated with sellers that are stubborn on their price, it's because those sellers don't have to sell often and they expect next year to be better. Yeah. But there are good deals out there right now, and I think this is still the bottom, and it should get better from here. I mean, it might be slow for the next 3 months. You know, November, December, January aren't months where a lot of people want to move. So you might get some opportunities there. But in this city, I tend to find that a lot of people think alike and everyone shows up at the same time. And my guess is come next January, we're going to see a surge of buyers and some listings at the market. And then month over month, it'll just get busier and busier next year. That being said, not every product type and price point is active. And, the more entry level, 1 bedroom, 2 bedroom, single family homes tend to show their colors first. If you're buying call it a $1.5 to $2 million single family home, you're going to feel the impact of these rate cuts a little bit sooner than if you're, say, selling a $3.5 million home in the suburbs that has been oversaturated and quiet for the last year. So there's micro markets within our market. Every price point, area, property type is doing different things. And like Denny touched on with Brentwood Burnaby, higher end condos, they're struggling. I imagine that higher end condos will still be struggling 6 months from now, but they will be performing better than they are today.
Mm-hmm. The other interesting kind of sentiment topic to even just mention, because we've podcasted about this before, going into rate announcement days, usually that week leading up to the rate announcement is quite slow. We often will push sellers the week after a rate announcement just because a lot of buyers are just sitting on the sidelines waiting to see what happens. And this was the first one. I don't know if you felt the same, but this is the first one for me where I felt everyone was kind of under the same impression that we were pretty sure that a 0.5 rate drop was coming. Markets had priced it in. Economists were talking about it like very, very openly that it's going to be 0.5, it's going to be 0.5. And this is the first week leading up to a rate announcement that I've felt busier than previous weeks. We'll see what happens after the rate announcement, but it seemed like buyers had this anticipation that this is going to happen and let's kind of get ahead of it rather than wait a week or two after this rate announcement, which might bring more activity. So maybe let's just touch on exactly what happened.
Yeah,
so the Bank of Canada reduced their overnight rate 0.5%. So that brings their overnight rate down to 3.75%. And that will, as a result, bring most banks' prime rates down to 5.95. And that is what your variable rate mortgage works off of. If you will likely have a discount off of that. And a typical discount on a variable rate mortgage right now is in the range of like a minus 0.8. So if you are taking a new variable rate mortgage right now, you're going to be working off 5.95 as the prime, let's say roughly minus 0.8. So your interest rate will be roughly 5.15-ish right now.
Yeah, that nails it. I guess just in terms of savings, a 50 point or 0.5% cut, if you have an existing variable mortgage, that works out to about $30 a month in savings per $100,000 in mortgage. So if you have a $500,000 mortgage, you just saved $150 a month. And $1 million mortgage, $300 a month. So this does incrementally make it more affordable, and I guess cumulatively, we're down 1.25% since June. So the mortgage payments for variable rate holders are coming down, and that's a huge positive. Plus, there is this, it's a weird mortgage dynamic because what are people doing right now? There's people that have renewals coming up. There's people that are buying. And I don't know, Denny, what are you seeing mostly in terms of the conversation between 5-year fixed, 2 or 3 year fixed, or a closed variable?
It's kind of the same as our summer podcast, but it seems like absolutely no one is even considering 5-year fixed at the moment. Most people are thinking either variable and ride this wave and hopefully it works out for the best, or 3-year fixed. If you're taking a 3-year fixed right now, you're probably saving, after this 0.5 rate cut, 0.6, 0.7, 0.8 in that kind of range per month today on an interest rate. So your 3-year fixed is going to be in the range of like 4.4, 4.5, 4.6 in that kind of range. And like we just kind of discussed, your variable is going to be somewhere in the range of 5.1, 5.2.
Now, just to check you, because I haven't applied for a 3-year fix, but when I was looking at ratehub.ca this morning, they were advertising it at like 4.74. So and the 5-year fix was starting at 4.05.
4.05.
Yeah. Now, granted, that's who knows what lender, probably.
That's probably
who knows the
insured
stipulations.
Yeah.
I think the 5-year fix is higher than that, but let's call it, I don't know, 4.25 versus 4.8. There's a bit of or 4.85. Call it like a 0.6 differential between a 3-year fix and a 5-year fix.
Yeah.
The argument for 5-year fix, I think there's some people that are just more risk averse right now that are going to just blindly just go for that 5-year fix. But if you're just trying to play the game, that's where, and want to tee yourselves up for a better mortgage renewal next go around, I mean, the argument for a 5-year fixed is peace of mind. The argument against it is 2 years from now, you might not feel good about your 5-year fixed, and the differential penalty to get out of it might be just astronomical by then. So yeah, closed variable, you're still at a higher rate today, but with momentum behind these rate cuts, how long is that going to last? That could even out next year sometime. I'm not in a position to do this right now, Denny, so I don't have to make this 3-year, 5-year closed variable mortgage decision. But it's a tough one for buyers because there's so much change happening right now, and when change is on the go, it makes the decision even harder.
The reason I said 4 or 5 for a 3-year fix, I've had a couple clients get in the last 3 weeks or so, get in the range of like 4.35 to 4.5.
Okay.
For 3-year fixed. And this is changing every week, so don't hold us to these numbers.
And we're not mortgage brokers, people.
Although we pretend to be economists on this podcast, right?
In the last 2 years, anyway.
Let's say if you were purchasing a property today and you had the option of 3-year fixed at 4.5 or 4.6 versus variable right now at 5.15, which direction are you going? Why?
I mean, I'd probably go 3-year. I'd rather pay more in the short term and tee myself up for a better renewal next time. Probably depends on the property type I'm buying, though. I'd also be tempted by the closed variable, just being more of a risk taker myself. But I don't think I'd lean towards the 5-year. But no, that's not the wrong thing. It's just I don't expect to feel good about it in 2 years or a year from now if I did it today.
Yeah. If we look at the history of mortgage rates, it seems like 8 or 9 years out of 10, variable wins.
Yeah.
And variable has absolutely got pounded in the last 2 years.
And for those like me that got pounded by a variable rate, now's the time where if you go the opposite direction, you're going to lose both ways, right? So now's the time where arguably, we've been hurt by the variable rate. And if you just completely do the opposite now, while the cycle's kind of going on a different trajectory, you're kind of doing the wrong thing. So it's arguably kind of, emotions aside, you want to be more, risk averse now because for some of us that got hit, but this is not necessarily the time.
Yeah. It is interesting having these conversations with clients right now because one, we are not mortgage brokers, but we do have a lot of experience buying and selling real estate over the last decade and helping hundreds of people do that as well. And personal experience is pretty interesting, but I've been a variable guy most of my life. And I would go hard in the paint at variable right now.
We're not the right people to talk to on this, Denny.
But it is, the point I'm trying to make is with a lot of clients are much more risk averse than maybe our natural tendencies are. And it is interesting hearing the more conservative type of clients who are steering towards variable right now, just because of the anticipation of more rate cuts. So more people are definitely talking about it from my experience over the last few months anyway.
So this is, I think we're going to be talking about mortgage options for the next foreseeable future as these changes happen. But aside from mortgage options like fixed versus variable, what are you seeing in terms of, well, one, we have, let's acknowledge other changes in other market things that are going to loosen up the money supply potentially. The CMHC change for first-time buyers, amortization going from 25 to 30 years. That's going to come up in December.
Yeah, for insured mortgages.
For insured mortgages less than 20% down. And then the insured mortgage cap increasing from 1 million to 1.5 might show its colors with some high-income earners that don't have high savings. But I don't know if that's going to have a major impact on the market. What are you seeing? I mean, I guess when it comes to the financial side of things, do you think investors are going to come back? What about first-time home buyers? Do you think they're the first that are going to, where do you see the most change between the down of what we're experiencing in this market versus 6 months from now?
Entry-level price points in various neighborhoods in Greater Vancouver. So whether that is first-time home buyers, one-bedroom condos in New Est, for example, that might be $500 to $550K. In Port Moody, that might be $550 to $625. In Poco, that might be $450, $475-ish. But also, I think you feel it the most in the entry-level single-family. Mm-hmm. So if we take those three neighborhoods again, New Est, that's probably 1.4, 1.5, 1.6 kind of range for entry-level single-family. Port Moody, that might be more like 1.6 to 1.8. And Poco, that might be more like 1.1 to 1.3. I think those entry-level product types, it seems like those are the people that have been sitting on the sideline the most, is the young family, the young couple that wants to upsize, that either is terrified because of what they're reading in the media the last couple of years, or just the numbers don't make sense with higher mortgage rates to make the jump from their whatever 600 or 700K condo to the 1.3 or $1.4 million home.
Yeah, I agree. I already see, I think we both already see a little bit more life in call it the $500,000 New West one bedroom condo, but it's still slow compared to before.
Yeah.
And that, there's a lot of first time buyers and people in the $500,000-$600,000 range that do not want to be tenants. They just want to own their first home because it's it's the mindset of many people.
Yeah.
And, once their affordability, every rate cut increases affordability. And the moment certain people can get what they want, they may show up to the market, and that could come in floods next spring.
Yeah. You mentioned investor, and I'd like to save that conversation for the next podcast. And the next one we'll release in maybe a week or so. But we are going to do one talking about rental market update, where rents are currently compared to last year, and maybe just run some scenarios of what purchasing an investment property would look like today in terms of a cash flow position. So that'll kind of answer that investor question of whether they're coming back or not. And the scenario looks a lot better today than it did 12 and 24 months ago with higher rates. So there's potential that comes back. And a lot of those investor type people are gearing towards one bedroom. So that also kind of plays into what we think about that first time home buyer, entry level one bedroom condo market throughout the burbs of Greater Vancouver.
We should also acknowledge that there's a lot of investors of past years that are closing on pre-sale condos right now. I think we touched on this in our last market update podcast, but I think some of the headlines we're just going to see is that there wasn't much gain for a lot of the condos or loss, more likely losses that are coming for some of the closings that are coming up. So the pre-sale condo investor, I think is going to be a while before they come back strong, but there are always seems to be investors that like putting 5-10% deposits down for something that completes 4 or 5 years from now when there is more optimism. So I'd be curious to see when my guess is that pre-sale market, there's a lot of projects that want to launch. There's some projects that have launched, but I just don't see them picking up traction in the next few months. And maybe next spring, but your guess is as good as mine. When do you think we're going to see lineups again around the corner for pre-sales? Or do you think that's done?
Pre-sales, I feel like, is a long conversation. There's so many things to talk about. One is like, there's some developers right now that are in really rough positions in Vancouver because they sold pre-sale projects. There's one I'm thinking of, I won't name them, but they have 2 really, really high-end buildings completing downtown in the next 12 months. And a lot of people are just walking away. They geared those projects towards like very high-end investment. A lot of people that do not necessarily live in Canada. And I've heard some pretty horrific stories about those 2 projects that people are just walking away, and the developer is going to be in a really bad spot of actually finishing these projects. So that's one thing to think about. 2 is construction costs. And with all this higher density coming to BC, we've talked about the permitting costs with municipalities, and that financially for a lot of developers, it doesn't even make sense to put these projects up. So I was talking to a friend who is a developer recently, and in his circle of like talking to people like big developers like Concord and Cressy and like some big names in Greater Vancouver, some of them are electing to just kind of push through, understanding that their 40, 50 story tower project is going to lose money. And some of them are just pushing through because they want to have jobs for their people and kind of just get through this wave of not ideal market conditions for them. But others are just putting projects on hold. So when you talk about the supply of pre-sale construction coming up, that's likely going to go down. The number of pre-sale projects that you see launch in the next couple of years is likely lower than a typical normal Greater Vancouver real estate year. And so that naturally, with investors coming back due to interest rates dropping and more optimistic sentiment for the future of Greater Vancouver real estate, I wouldn't be surprised if that happens in maybe 12 months from now, but I don't think it's happening tomorrow or early in the new year.
I mean, it could be years.
Totally.
Yeah. Yeah.
If you were an investor right now and you wanted to buy a 1-bedroom condo that you're going to rent out, do you think you would focus on a pre-sale project in a good location that's going to be complete in 3 years, speculating that market conditions will improve? Or are you looking resale specifically?
I mean, I would be looking at resale. I would rather there's deals right now, and pre-sales can't be sold at deals necessarily. There's a limit to what they can do. So when you look at the sale prices of a 5-year-old 1-bedroom versus a pre-sale sale price plus GST, it's just a far better deal in the resale market. You get better, good selection, good time to buy. It forces you to be a landlord sooner. That's the only downside.
Yeah.
But you know what? I mean, you're buying an investment condo to rent out. If you buy an investment condo to flip with no intent to rent it out, that's risky. So if you're not willing to be a landlord, I don't know if it's the right investment for you. I think you'd need to be willing to rent. And that's kind of a lot of the advice that I've been sharing with some people that are closing on condos that are underwater. Not underwater literally, but just, they're just not going to recoup their cost. So I think now is the time where, as an investor, you got to decide, are you going to take that big hit if you're closing on a new condo, or are you going to just put a tenant in there for 2 years and mitigate your losses? Outside of the pre-sale condo, I wouldn't mind pivoting a little bit to some practical advice that you'd give buyers right now looking for 1-bedrooms, 2-bedrooms, townhouses, or single-family homes. What would be for single family, like in terms of this market, we're late October right now, but let's talk about November ahead. What are the pros to buying a single family home or townhouse in November? And to me, the standout thing is selection, time to search. When you compare this market to past markets, the buying conditions are phenomenal today in terms of buying with subjects, buying without being in multiple offer situation, buying subject to sale.
Yeah.
So I think if you're buying a single family home, you're more likely to get a subject to sale offer than ever before. And I think one of the big challenges that I've seen with, call it a $2 million house, is most of the buyers for a $2 million house have something to sell. And so most sellers right now are more open-minded to that subject to sale than ever before.
Yeah.
And especially with like a November timing, if it were, call it March, you would be less inclined to do a subject to sale because it might tie you up or deter buyers in the spring. But in November, as a seller, I think it's a more timely time to consider a subject to sale offer because you're tying your property up and with call it a 48-hour clause that allows you to still entertain other offers, but having a subject to sale offer does discourage other offers a little bit. But if you're going to have a subject to sale offer that deters potentially some buyers, it's better to have that subject to sale offer November, December, January than it is March, April, May. So I think from a buying position, you can buy subject to sale, which means that you can take very little risk on your purchase, and it gives you time to know your sale price of what you're selling before buying.
Yeah.
And that's a huge perk from the market of before. So I think anyone that's kind of just blindly saying, you know what, next year's the year I'm going to move. If you're kind of tight on your finances, or if you value subjects and subject to sale, I would consider sooner than later. I think those subject to sale offers are going to go out the door pretty quick in 2025.
Yeah.
For, call it, single family homes and townhomes.
Yeah.
Anything to add for that segment?
You nailed a lot of it. I'd say the thing I would add is if you are in that camp and you are actively looking this fall, you remember to be patient. There's a disconnect, and we've talked about this before. There's a disconnect right now between a lot of sellers that have been sitting on market for a while and what market values actually are. And even just in the last few days, I've shown a couple of homes that people are like, well, we'd really like it. We'd like to rate an offer. Like, okay, well, my opinion of market value is this. That's $250,000 less than they're listed. And they're like, okay, well, we'll just rate an offer at that. And that doesn't necessarily mean the seller's going to be motivated to work with that offer. So just understanding that in weird markets like this, we're in this fringe transition period, it feels like. You may not get the home you love at the price that you want in weird markets like this, but there's a lot of selection and there is enough sellers that really want to sell right now that there are deals and there are conditions that are much more favorable than in years past, such as subject to sales.
Yeah. I'd say in terms of the selection, no, there's a lot of selection for this time of year
Yeah.
right now. But in terms of quality selection for certain property types in certain areas, it still is limited. Like you still run into buyers that say there's nothing out there.
Yeah.
And it's mainly when they're not saying that about a Brentwood 2-bedroom condo.
Yeah.
They're saying that about a single family home and call it under $2 million in the Port Moody or North Van around 2. And there are more homes out there, but there's a difference between the typical home and that turnkey, nicely renovated, well-kept, charming backyard, quiet street, house that everybody wants. Yeah. The turnkey one that's updated still gets a lot of interest, but a lot of people that show up have to sell. I think the thing that I've said more in the last few months than any other time in the last decade when I'm showing properties that we're listing is, does your buyer have something to sell? And it's more yes than ever before.
Yeah.
Just because it changes the conversation a little bit. 1-bedroom condos. I guess just going back, the argument not to go for a townhouse single-family home right now might be there typically is better selection in a spring market than a fall market. And if your home is not sale ready and you have a lot of work to do and you are thinking of buying subject to sale with a house that's not presentable, it's going to be a challenge to sell your own property. So yeah, you might be able to get a buy under contract subject to sale, but you're going to also have the challenge of selling your own property. And now more than ever, it's important to have it show as good as possible. 1-bedroom condos, why now as opposed to next year? I think why now for a buyer standpoint is there's great selection out there, in my opinion, for 1-bedroom. Maybe not, prime April, May, spring selection, but I think, by April, May, where the rates are likely going to be, I think there's going to be just a lot more buyers in that segment, and a $500,000 condo can jump to $550,000 pretty quick. So that 10% gain, that properties can jump 10% quickly, and 10% is a lot. So that's when I see the 1-bedroom or typical 2-bedroom market, I look at just the fact that you're more likely to get on the right side of that 10% buying now than the potential wrong side of that by next May or June as a buyer. But the argument to wait to next May or June is just probably affordability. Your mortgage payment will be better, but you expect more competition there. The only exception I would say is there's obvious sales data about there's little micro markets that are just oversaturated. So when I'm talking about this, in my head, I'm thinking of like a nice 1-bedroom in, say, downtown New West or Brentwood or East Vancouver that are desirable buildings, desirable areas. But there are areas where you have a new building that just closed that has 24 listings or more. You have areas in the Fraser Valley that are oversaturated with listings. Brentwood has a lot of condos and higher price points, but there are areas that, by the numbers, they will be slow for more than a year to come.
Yeah.
Any other tactical or practical advice for buyers right now?
I'll leave this podcast with this note of, I think the supply-demand equation is going to look better over these next couple months than it will over the next couple of years. Meaning there's more supply and less buyer activity for the majority of this type of product that we're talking about right now than there will be moving forward for the next couple of years.
Yeah, every situation needs to be evaluated on its own, Denny. What do people do when they're trying to figure out what they should buy, when, and how?
It's a really good question. The first thing I would do is probably call James Garbutt.
I was going to say call Denny Dumas. Yeah, we'll leave it at that. But we are all ears. Would love to hear about your situation. If you're thinking about making a move, buying or selling this fall, reach out.